All right, Bulls and Bears, welcome back. You're watching Bull Boom Bear Bust. My name is JJ, back with another dose of economic reality. As always, a lot of news to get caught up on, folks. Every day, so much news coming out with the economy, the financial world, if you will. Let's go ahead and get into it, folks. We got the stock market nearing all-time highs again after the big panic sell-off. Remember, after the tariffs were announced, we saw a big drop. Well, look what's happened to stocks. We're going to get into that and where I think it's going next. We've got the president out there warning Wal-Mart about their prices, and we'll get into that whole story for you as well. Massive storms causing many, many casualties and so much property damage. We're going to see a big increase in materials cost on top of the tariffs, folks. So it could mean very inflationary things for the housing market. We'll get into that. Capital One had to pay a big fine because of their savings accounts. A weird dust bowl in Chicago. A lot of weird, strange news to get into today. But let's go ahead and start with one of the big ones here. Oh, we've got more calls for rate cuts out of the current administration too. But stocks nearing all-time highs once again, folks. Let's take a look at a chart here. And we said right here in this channel they could pump this market back up just as quick as they sold it off. Why? Because the sell-off didn't make any sense to begin with. Right, we were told the stock market was selling off, that big money, the whales, if you will, the investors, were selling off stocks because of inflation, and now, of course, the tariffs on top of inflation, afraid that there was going to cause more inflation. That was the reason for the sell-off. But that didn't make any sense because the stock market went up over the past 5 years when we saw nearly record-breaking inflation. So it didn't make any sense from the get-go. So we knew there was a very good chance that they were just going to pump this market right back up. Plus, you have the powers that be, the team, if you will, that's put out there to keep the stock market propped up. And we'll go ahead and start right here with the S&P 500, folks. Look at this. Right, the big sell-off. We saw this peak in February of this year, 6,117 S&P 500. Dropped all the way down to 4,982. We're back up to 5,958, folks. So huge recovery. Will the stock market go on to make new all-time highs? That is the question. I see no reason why not. I mean, when you look at patterns, when you study stock markets, you start to look for patterns, things like double tops. We saw double tops that preceded many market downturns in the past. A lot of market downturns, double tops. We had a double top this time as well. But things could be different this time, folks. I think a lot of things are changing right now. A lot of things that were usually baked into the cake, so to speak, are a lot different. We've got some things happening behind the scenes. A lot of government involved now in the financial system. We'll get into that here in a little bit. But first, what's your prediction on this? New all-time highs in the stock market? Or are we going to see prices approach the previous peak and have another downturn? So it could be a triple top. If you look at kind of what we looked at here, if you're looking at the chart right now, you're looking at the double top back here earlier this year, from December to January rather. And we're coming back up on now on a triple top and then more downward trajectory for the market. Please let me know what your prediction is for the markets here down in comments. Also, we have consumer sentiment now dropping to nearly a record low. Now, let's go back a few months. Just after November, just after the announcement of the winner, the selection, if you will, and people were very optimistic. They said, okay, prices are going to come down. They were promised inflation dropping like a rock on day one. None of that happened, folks. In fact, people are more fearful now. Look at this chart out of the Wall Street Journal. A huge drop here over the past few months. And a lot of this coincided with the news about the tariffs. Everybody's worried about high prices, folks. Household budgets are stretched like never before. Unaffordability at all-time highs still in the housing market. Not seeing much relief there. And with the destruction of all this housing that we saw of these storms, it's likely to get a lot worse. Let's go ahead and jump over there next. And it was a bad one, folks. 28 people unalived and 500,000 people without power as storms and tornadoes swept across central and eastern U.S. We even saw tornadoes in northern Illinois, which was very Interesting. They've happened there before, but not to this scale. A new round of severe weather turned out overnight Friday. Multiple tornadoes tearing across central U.S., including one that prompted an urgent and rare tornado emergency in Illinois, folks. 28 people unalive. Large tornadoes. Missouri, Kentucky, Illinois, Indiana. I'm sure if you watch national news, you heard all about it, but so I won't get into the numbers too much here. But look at some of this devastation. This is AccuWeather showing all this. Imagine that, folks. Think you're having a bad day? Just take a look at some of these pictures. Bring up a larger image here. Some of these people picking up the pieces, literally, of their broken residencies. I couldn't imagine. Right? I've had bad days, and I'm sure you have too, but this is another level. And what's this going to mean for lumber prices? I just got done talking to my insurance company earlier. I have an agent over there, and basically another rate increase on home insurance this year for California and, of course, most states as well. The reason being higher costs of materials. Of course, that's one of the things that I'm being told. And I think it's pretty obvious, folks. Here we got these tornadoes. At least 5,000 homes were either destroyed or partially damaged here across multiple states. So what's this going to mean for material prices? It's going to go up even higher. Now we've got the tariffs on top of that. And prices were high to begin with, even before the tariffs, and even before this latest round of tornadoes, right? So it's going to be very, very difficult to see a housing market correction when rebuilding costs and materials and lumber is not really dropping that much, folks. And it's likely to spike back up here with everything that's going on, right? So be thankful if you didn't get your home blown away because, wow, there's certain states that I thought about moving to from California. We've had that discussion here on this channel, like, why am I still in California? I've said many times, why? And that's because of family. Kids in different schools. We've got a elderly family member now in a nursing home, so we'd have to pick them up and move them to a different home. And we take care of them sometimes too. We bring them over on birthdays and stuff like that to get them out of the home, out of the nursing home. So stuff like that, folks. I mean, it's not as simple as just California is expensive, let's move. You got to think about the people around you. I mean, if you're single and no family, nobody dependent on you, then it's much, much easier. Otherwise, I might have tried to move to a different state, but where do you go that's safe? I mean, there's something wherever you go. I know I've spoken to people in Texas and down on the coast there, even the Gulf Coast. Some people haven't had to suffer any tornadoes down there. Places like Corpus Christi, I've heard that they really didn't feel too many impacts of too many hurricanes down there. They're safe places, but my point is pretty much everywhere you go, there's going to be something you have to be concerned about, something you have to worry about. And not just tornadoes, but other strange occurrences. And staying in the state of Illinois for a minute, Chicago experiences first dust storm. Right, they just experienced the first dust storm since the Dust Bowl 91 years ago. Look at this, folks. It was nearly invisible there. Like visibility was nearly zero for a while. You couldn't really see maybe 20, 30 yards. And you can even see it on satellite. The dust storm was so big. This was the Dust Bowl from 91 years ago. If you're looking at this picture here, this is out of the Sun Times. The huge Black Sunday storm, the worst storm of the decade-long Dust Bowl in the Southern Plains as it approaches Ulysses, Kansas. When all these farmers getting prepped to plant in the coming weeks, there's a lot of loose soil. It was kind of a unique setup where we're just the right place at the right time. So you had the high winds on the tail of the tornadoes with a lot of farms that were getting ready to plant seeds. And then you had this huge dust bowl, even visible from outer space. Incredible satellite imagery of a dust storm hitting Chicago this evening. All right, let's play this really short clip, actually. But look at that. That's massive. Okay, I'm just going to keep looping it here. It's so insane to watch this. Look at that. Wow. Interesting times here, folks. NWS Chicago put this out. Well, that was something. This marks the second dust storm warning in our office's history. The first was they're saying 2023. I'm not sure if they're not counting the Dust Bowl. That warning was away from the metro area. This was the first dust storm warning that included the city of Chicago. And they gave us some pretty interesting pictures here. See if I can zoom in on this one. Very interesting pictures. Look at that. That's scary, folks. So do you live in Illinois? Let me know how this affected you. The dust gathering on vehicles. Uh-oh. I have to hit mute. Don't know what song that is playing. Don't want to get copywritten. Oh, all over the car. Let me play that again. Maybe I won't play it again. Never mind. I just got blocked there. I just got told I need to buy a subscription. So we'll go ahead and pass on that. All right, now on to the bigger news, folks. We got the president out there warning Walmart, do not raise prices due to the tariffs. And to sum it up, basically he's saying that Walmart and other retailers, but Walmart specifically named as making huge profits. And with the profits being so much, why would they need to pass along the increased costs of the imports because of the tariffs? Why would they need to pass that along to the consumer? That's basically what he's saying. Well, we've talked about greedflation here many times, and Walmart's no exception. I mean, they're raking in record profits, even though they are cheaper than many other retailers. And by the way, they're driving and have driven a lot of small and local businesses out of business, right? They've eliminated a lot of the competition. Even Walmart still has pretty good prices, though, compared to a lot of other places. But what's it going to be? Are they going to back off on the price increases? Will they actually obey the threats, or will they heed the warning? Here's how they put it at AP. The president ripped into Walmart, saying on social media that the retail giant should eat the additional costs created by his tariffs. Prices were jacked up because of these tariffs, and we were told that there would not be much inflation, of course, by the administration. So we think that he's likely afraid that they're going to make him look bad. Quote, Walmart should stop trying to blame tariffs as the reason for rising prices throughout the chain. And what I said earlier, they made billions of dollars. So basically he's saying that corporations that make billions of dollars should not raise prices. Well, that shouldn't be just true during the time of tariffs. That should be true all the time. But there's no limit on profits, right? There's no limit on how much these companies are making. And in a free market, you're allowed to charge as much as you want to. So some people would argue that these corporations, they're too wealthy already, or the people at the top are too wealthy, and that they're making too much money and that they're price gouging. Others would say that Walmart's actually saving them money because compared to any place else, Walmart's pretty cheap. That's why so many people shop there, as well as they have a big selection of things. But, I mean, where do you draw the line? Do you draw the line nowhere? Because a free market means a free market. You're allowed to charge as much as you want. And if people don't like it, they can shop somewhere else. Well, then you have a problem because Walmart's such a dominant force now in retail. They've, again, driven so many other businesses out of business that there's not many other places to go. I mean, name many other stores that you can go to and get all the things you can get at Walmart. They have everything there. Get your oil change at some of the Walmarts and go grocery shopping because some of them have an entire grocery section, right? The super Walmarts. There's a store back east. I used to live in Michigan called Meijer. That was kind of similar to Walmart. Of course, Kmart, Target. Kmart's out of business for I think all Kmarts are gone. I think there might still be one left in Florida. Doesn't matter. Mostly gone. Target, these big stores, they dominate, folks. And to say that they can go ahead and raise their prices to infinity and making the argument that you can just go shop somewhere else, good luck. Good luck finding somewhere to buy all the things that you buy at a Walmart. Now, this whole thing comes on the tail of Walmart. Back in April, they came out and said they're likely going to have to raise prices because of the tariffs. And they even met with the president, but the administration went forward despite warnings from these retailers. He went forward with the tariffs, and he's attacked different companies such as Amazon and Apple that are struggling with the disruptions in their supply chains. That's what they're saying out of AP here. Wal-Mart Chief Financial Officer John David Rainey said he thinks $350 car seats made in China will soon cost an additional $100, a 29% increase. Yeah, we don't make many child items or goods in America. Quote, we're wired to keep prices low, but there's a limit to what we can bear, or any retailer for that matter, he told AP. But let's take a look and see what their profits were. Walmart's profits here. Let me just do a quick search here. And we'll just bring it up here out of a search here. Google AI. Walmart's latest profits. First quarter 2025 ending April 30th. Adjusted earnings, 0.61 a share at 61 cents. Total revenues for the quarter increased by 2.5% to $165 billion, as same-store sales grew by 4.5%, driven by health, wellness, and grocery. All right, now income is one thing, but profits, that's where it boils down to, because income doesn't necessarily mean you're making profits, because you also have expenses, just like any business. First quarter, $4.49 billion. And that comes on off of the $165 billion in revenues. All right, people, so I'd like to know your consensus. Should there be some limitations on what companies can charge, or is it a free market? They should be able to charge what they want, and if you don't like it, go shop somewhere else. I think it's going to be kind of a 50-50 split on this, but please let me know what you think down in the comments about that. And should the president not even do this? Should he not even say anything? Because it's not really a fair thing to put these retailers kind of in a political battle type of situation. All right, so it's going to continue to get more interesting, folks. Remember, we have the markets opening up on Monday after this U.S. downgrade, because that was announced before the weekend, after markets had closed, I believe. So Monday is going to be very interesting. Are we going to see another sell-off in the stock market because of the credit downgrade? Remember, other credit rating agencies have already downgraded the U.S. before this latest one, and we didn't see markets collapse or crash, right? So some people would say it's a nothing burger. Other people say it's something to look out for and something to be aware of. All right, but let's talk about Capital One, folks. Capital One had to settle $425 million litigation over their savings accounts. Capital One, what's in your wallet? What was this about, folks? This was a big settlement, nationwide litigation accusing it of cheating savings account depositors out of much higher rates by not telling them they could move their money to a higher yielding account. A notice describing the preliminary settlement was filed on Friday in the federal court in Virginia. According to the judge, depositors said Capital One falsely promised high interest rates on its 360 savings account while quietly offering much better rates to newer customers on a similarly named 360 performance savings account. So they're saying it basically, I wouldn't call this a bait and switch. I would call this a lie by omission, right? So they didn't tell the customers. They didn't really go out of their way, I think, to deceive them, but they didn't tell the customers that they could get a higher earning account. That's a tough one there. 360 savings depositors said Capital One froze their rates at 0.3%. Oh, that's nothing. While offering rates to 360 performance saving depositors at about 4.35% at the highest early last year. Wow. And averaging a yield of about 3.6%. Under this settlement, Capital One will pay these depositors $300 million to cover their interest they could have received on the 360 performance savings account. It'll also pay $125 million of additional interest to depositors who still have the 360 savings accounts. After you divide that up over all these depositors, you're lucky to get maybe $20 or $30. I mean, we'll see what the numbers end up being, but once you divide it up, kind of like a class action thing there, once you divide it up over millions of people, that's really a drop in the bucket in the grand scheme of things. All right, folks, we're going to wrap this up. Also, something that I just read, serious loan delinquencies on automobiles just surged again. I want to get more into the details and get you a chart on that. That's going to be on our next report because I don't have all the charts access that I want to show you. I couldn't find a very recent chart, rather. So that'll be in the next report. Please make sure you are tuning back in. Hit that notification bell. Please make sure you are subscribed. And we'll see you back here on this channel, folks. As always, keep stacking. Bye for now. Peace.